Nvidia shares are still falling about 90 minutes into trading after its guidance disappointed Wall Street. So should investors buy the dip, or is there a reason to step back from the AI giant? We have Nancy Tengler here to kick off today's show. She is the CEO and Chief Investment Officer at Laffer Tengler Investments. Nancy, great to have you back here on the program with us. So first and foremost, I got to get what you make of the report that we saw from Nvidia. Shares moving lower by about 2.5% as of right now. They've been down throughout trade post-report, but it's not weighing on the markets that much, which is interesting considering the outsized move that we've seen driven by Nvidia. What do you make of this?
Yeah, Brad, thanks so much for having me. Well, I think what you're seeing is that the other AI proxies like Broadcom and AMD, and then some, expanded out from there, are doing well on the report. I think the issue is that the stock had run off the recent lows pretty hard. It's not super expensive when you look at it on estimated sales or estimated price to earnings ratios, even the PEG ratio. But it was set up for a disappointment on the Blackwell yield problem. I think the company has right-sized that. I think you want to use weakness as an opportunity to own this stock for the next 5 to 10 years. Interesting.
And so we've heard of valuations perhaps in the future, over the next 5 to 10 years, getting as high as maybe $10 trillion for this company. Where do you believe that there's going to be perhaps the next big thrust of energy around Nvidia, or is this going to be in kind of wait and see mode and ultimately watching the company deliver upon what the market expects of it?
It's interesting. If you look at the decelerating growth that analysts also seem to be worried about, and you go back and compare that to Microsoft's 90% growth in the cloud and then subsequent slowdown. I mean, we know that these levels of growth are not necessarily sustainable. And so I think what you want to do as an investor, but by the way, that did not hurt Microsoft's stock price. It's up 3 to 4 times from that decelerating cloud growth. As the use cases for AI go up, and they are, all you have to do is look at a company like Walmart, whose margins expanded last quarter without raising prices, and we believe that was largely due to their implementation of AI across the platform. So in advertising, e-commerce, stocking, cataloging products, this is what we need to see next. And I think we are seeing it broaden out by industry, and that will be the next catalyst for growth. So I think we're in early innings. We've drawn an analogy to the 1990s for the last couple of years. I was managing money then. This is not the internet bubble. This is not eyeballs being measured. This is real technology that will drive productivity-driven growth. And I think we saw that with the GDP numbers coming up in productivity in the almost close to 3%. So you just have to kind of steel your nerves and ignore the volatility.
Do you recall when Nvidia was simply the business producing graphics cards for video games? Those are the distant memories. Riding the AI wave, Nvidia has become the industry titan of this rapidly expanding sector. Once the talk of the gaming community, its graphics processing units, GPUs, today power the vast data centers fueling the rise of artificial intelligence. Over the last 2 years, this change in direction has caused Nvidia's stock to surge, propelling the business into the top tier of globally valuable companies. Even the most popular IT companies can experience market anxiety. Nvidia's stock has experienced some volatility in August as investors struggle with the company's exorbitant valuation. However, in the midst of all of this volatility, there is one very strong argument for why this most recent decline may be a fantastic chance for investors. Let's examine Nvidia's recent wild journey and see why its decisions clearly indicate what the company hopes to achieve. With the stock trading at almost 34 times fiscal 2027 earnings predicted, several investors are perplexed as to whether Nvidia's rapid growth will support its exorbitant price. What's the short version of it? The price of Nvidia's stock assumes that the company will continue to dominate the market for AI-capable chips for another 10 years, with strong demand during that time. The shocking thing is that Nvidia's recent top-line growth has been nothing short of astounding. From $3.6 billion in Q4 of fiscal 2023 to an astounding $26.3 billion in Q2 of fiscal 2025, data center revenue soared. Since tech giants like Microsoft and OpenAI are rapidly moving toward artificial general intelligence, there is an unquenchable need for AI-powered data centers, which is driving this explosive expansion. Nvidia's executive team is stepping up with a huge vote of confidence as the market becomes uneasy. Despite the stock's high valuation, they're repurchasing shares like there's no tomorrow and have no intention of applying the brakes anytime soon. Nvidia repurchased shares for $7.2 billion in the second quarter of fiscal 2025. In comparison, it distributed only $246 million in dividends over the same time period. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market, so click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
So my next guest says of Nvidia stock, Blackwell suppliers shrugged off delays ahead of the 2Q earnings. Writing them out results really for her, but this stock has helped her clients get a 3,900% gain. 3,900% we're talking about. So let's bring in IO Fund, their lead tech analyst, Beth Kindig. Beth, you know, I began the show by saying that everyone has an opinion on Nvidia these days, but you saw the potential, you rode that wave with conviction, and there were times when this stock would take drubbings out of this world. You came on this show and said, I'm still convinced, and it's because of the work, right? So I want to start with that because your latest report says, has the first line says, bulletproof Nvidia showed an unusual bout of weakness this month. You know, it all came about this with the design flaw that was mentioned in the information, sent the stock reeling. How much of an issue is that really?
Hi, Charles. Great to talk NVIDIA with you again. The design flaw was exaggerated. It's actually more about an advanced packaging process rather than the design of the GPUs. Ultimately, it will be immaterial to Blackwell revenue by next fiscal year. My team worked really hard last week on a 6,000-word analysis that pointed to a lot of data that we are getting bullish signals from the supply chain. I fully expect NVIDIA's management team to calm any concerns about the outlook for Blackwell.
So with that in mind, then how surprised were you that the stock got hammered, right? It went to an intraday low of 90 on August 5th.
You and I talk about NVIDIA, you know, every month, every 2 months, and I had chatted with you about buying on dips. We bought on the dip July 31st. That continues to be my firm's strategy. We have 2 to 3 quarters before Blackwell arrives. Buying on dips worked as soon as this last month, or as frequent as this last month, and we continue to see that as our strategy, buy on dips.
You know, in your latest report, I was intrigued by the part where you talked about Taiwan Semiconductor and how they combined with Nvidia to create improvements that defy Moore's law. And of course, without getting too much into the weeds, I mean, it sounds like they are actually rewriting the rules of technology.
Yes, where Wang's law is different, that's the CEO of NVIDIA, is that instead of simply doubling transistors, this company's design is pure ingenuity. They produced something called the transformer engine for Hopper, and without getting into the weeds, it greatly increased capability and performance. So I would say Moore's law does not apply to GPUs, and Jensen Huang and NVIDIA has proven this.
Also, no, not your note. I read another note, and I saved it, though. I read it like a week ago. It was the CFO from Applied Materials said, in our discussions with the leading AI companies, they're telling us that reducing power per operation is now more important than increasing operations per second. Are you buying into that? If that's the case, does it make a challenge for NVIDIA?
Yes, so the tens of billions that big tech is spending on AI, some of that will be redirected to lowering AI power consumption. Every AI investor should have allocation to solving the power consumption issue. Timing for that, again, is Blackwell.
But there's more. Wait. On August 26, 2024, the board of directors approved an additional $50 billion in share repurchases with no time limit. By any standard, that's a resounding vote of confidence. Here, NVIDIA's board is doing more than just speculating. Codenamed Blackwell, their next-generation GPU, is already looking like a moneymaker. Blackwell revenue is expected to reach several billions in Q4 of the 2025 fiscal year, according to the business. This prediction highlights the unwavering demand for Nvidia's state-of-the-art AI technology. Naturally, not everyone is incredibly optimistic. Concerns over this exponential growth's sustainability are being voiced by a few industry experts. They are unsure if Nvidia's well-known clients, including Microsoft, Amazon, Meta, and Alphabet, will continue to spend money into AI in the absence of quick financial gains. It's not just the naysayers in the back seats that are skeptical. Despite the significant investments made by major tech firms, economist Darren Acemoglu of MIT is among those who have questioned whether AI can provide meaningful returns on capital in the near term. However, outside of Silicon Valley, most of these dissenting opinions are being expressed. Within it, there is unwavering optimism in AI's immediate potential. Nvidia's stock is still the hottest thing in town for insiders. It is supported by the facts as well, with $32.5 billion in revenue predicted for the current quarter, a staggering 79% rise in revenue from the previous year. The company's steady innovation, firm hold on the market, and unshakable confidence from management all point to a bright future for the stock. The icing on the cake, Nvidia's vigorous share buyback program provides a strong argument for buying shares during this most recent decline. The main complaint leveled at Nvidia seems to be that AI is a hoax and that the good times are almost over. However, this is only the beginning for AI, which is already having a significant impact on society. I believe that in the coming years, self-driving cars, artificial intelligence, AI-powered medical facilities, and a plethora of other revolutionary technology will become widely available. Therefore, even if having a healthy dose of skepticism is usually a good idea, the actual data provide a very different picture. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All right, time now for our biggest trending trade. The earnings came down, the fireworks went off. Although the stock was under pressure, there were even viewing parties for Nvidia's quarterly results. I mean, the business is going gangbusters. Sales more than doubled. If there were to be a quibble point, as they say, sales are going to grow 80%. So I guess that's less than the more than 100% that they were doing. But they talked pretty optimistically about working through some supply constraints around their next generation semiconductor chip. The big question, of course, is what to do with the stock. It's been a high flyer over the year. It's been consolidating recently. Let's put it to a bull, and we'll put it to, I call him a bear, but technically he's got a neutral on the stock. Let's bring in Dan Ives. He's an analyst at Wedbush. He represents the bulls, and Gil Luria, senior software analyst at D.A. Davidson. And Dan, because the stock is under pressure, let's kick it off with you. What did you see in the quarter that you loved, and how do you explain the reaction?
Yeah, and look, under pressure, I think there's a stock that's actually up, over the coming days. Look, this was a masterpiece quarter. I mean, they should print the press release off and put it in the Louvre in terms of what we saw from a demand perspective, the Blackwell delays, that those fears, Bark was worse than Bite, and that outlook over the coming years. I think it just sets the bar where the godfather of AI continues to under-promise and over-deliver. I think this is just the start of the AI revolution. A year from now, a $4 trillion market cap.
$4 trillion.
A Craig-Hallum analyst reiterated a buy recommendation on Nvidia stock on Thursday and raised the price objective for the company's shares from $125 to $165. The change was made in response to Nvidia's most recent earnings announcement, which beat analyst estimates. The analyst thinks the market might be undervaluing the company's prospects despite a post-earnings decline in after-hours trading, especially given the impending transition from its Hopper product line to the new Blackwell generation. Blackwell's release is anticipated to boost Nvidia's fourth quarter sales, since the GB200 model is seeing strong demand. According to the analyst's projection, Blackwell might boost revenues in the fourth quarter by several $billion. Although sales of older products usually fall when new generations enter the market, the analyst believes that the Hopper line may see strong demand for some time to come, supporting the Blackwell ramp-up. Higher revenue forecasts for the fourth quarter, which were previously estimated to be around $33 billion, have been reflected in the financial model for Nvidia. The rationale for the revised $165 price target comes from increased adjustments to the earnings per share, EPS, forecasts for the fiscal years 2026 and 2027, which were also affected by the increase in projected sales. The analyst's analysis confirms the belief that one of the major factors affecting sales in the fourth quarter of the fiscal year 2025 will be the switch from Hopper to Blackwell. Over the next 2 to 3 quarters, the market will become more clear about the Blackwell ramp-up. The expert claims that the main factor limiting the high demand for Nvidia's latest generation is the availability of supplies. To summarize, Craig Hallam continues to have a good perspective on Nvidia and points to the Blackwell generation's potential for sales growth as a major factor in the company's financial performance, which is why the price target was lifted and the buy rating was maintained. In other recent news, a number of research companies have turned their attention to Nvidia Corporation as a result of its impressive financial results. The IT behemoth revealed record-breaking $30 billion in revenue, mostly because to the popularity of its Hopper and GPU computing platforms. The company expects its Hopper architecture and Blackwell products to rise, driving its $32.5 billion third-quarter revenue projection. Rosenblatt Securities kept its buy rating on Nvidia and increased its target price to $200, while Truist Securities increased its target price to $148 and kept its buy rating. Needham lifted its price target to $145 in light of Nvidia's strong financial performance, while Baird raised its objective to $150, citing the company's potential for sales growth. Nvidia's move to the Blackwell GPU has raised questions about the company's future gross margin prospects, although Summit Insights kept its buy recommendation. The company anticipates resolving these issues by the beginning of 2025. These are a few of Nvidia Corporation's latest innovations.